Hi YouTube, what's going on? Welcome to the 5th episode of the channel, and today I'm going to be talking about why you should invest during a recession. But first, I'd just like to start off by saying a big thanks to everyone that's subscribed so far, and if you haven't already subscribed, please hit the subscribe button now. I'm going to be documenting my journey to financial freedom, and I want to give you some tips along the way in order for you to achieve financial freedom. So please smash the like button and hit subscribe. So basically today's video I'm just going to be talking about why it's a good idea to start investing during a recession. So first off, what happens during a recession? Basically what happens during a recession is that the majority of investors panic. They sell their shares. Why do they sell their stocks? Well, a few different reasons, but I like to think of it more as a panic thing. They've been investing money into stocks, and as soon as they see the prices go down, they go, oh no, I'm going to lose all my money if I don't get out quickly. So they get out and they sell their stocks, and then that drives the price of the stocks down even further, and then it's called a market crash. I personally think that selling your stocks during a recession is a really bad idea, because once you actually sell your stocks, once you decide I'm going to get out, I'm going to sell my stocks and just cut my losses, that means that you actually do lose. You lose your money. So if you've invested at the market high, wait until it drops during a recession and then you sell out, you've actually lost money. Whereas if you have the stomach just to hold on to them stocks and ride out the recession, slowly the market will come back. It'll come back to where it was, and it'll even grow. The way I look at it is, whenever you are picking a stock to add to your portfolio, you're supposed to research that company. You're supposed to figure out whether or not that stock should be added to your portfolio by looking at its books, by looking at qualitative analysis. Is the company doing well? Is the company going to grow, etc.? And if you do your research and you decide that a company is good enough to add to your portfolio, and it's, say, for example, at $100 per stock, and you buy it at $100 per share, whenever the market crashes and the price of the stock goes down to $60, surely you're thinking to yourself, great, this stock's on sale. So if you like that stock at $100, surely you're going to love it at $60. For me, the word recession means sale. It means there's a sale on stocks. All good blue chip stocks are all at a lower price, and therefore now is the time to invest. Warren Buffett actually has a famous quote on this. If you don't know who Warren Buffett is, I'd recommend you Google him. He's probably the most successful investor ever. He's become a billionaire through investing, and his quote is, be fearful when others are greedy, and be greedy when others are fearful. In other words, when people are selling out of their position in companies, maybe that's the time that you should buy in. Warren Buffett has been smart enough to know that bad times do not last forever. So when stocks are on sale, buy them, because in years to come, that price is going to go up and up and up, and then you're going to end up winning. You're going to end up well on your way to financial freedom. So now I'm actually going to prove to you that what I'm talking about is actually correct. I'm actually going to take an example here. So we're going to dive into my laptop and I'll show you what happens if you buy stocks during a recession and what happens if you sell stocks during a recession. So for today's example, I'm going to be looking at the 2008 housing collapse in America, which then created a stock market crash. And I'm also going to be using the company Microsoft, which I'm sure many people here have heard of. So if we look at the price of Microsoft at its peak just before the crash in 2008, it was trading at roughly $37.06 US dollars. That's what it was trading at just before the market crashed. And then if we look here, it crashed and went all the way down to $17.06. I'm going to show you why it would have been a great idea to buy Microsoft at $17.06. Also, I'd just like to point out firstly that if you had bought Microsoft at $34 or whatever it was, and then sold out down here at $19, $17, obviously that's a mistake. You're not realizing your actual losses. You've lost money when you do that. But I'm going to show you what the smart thing is to do. You should be banned during the recession, and here's why. So I'm now going to show you why it would have been a great idea to invest in Microsoft at its lowest price of $17.06 during the 2008 recession, and I'm going to do it with a calculator here. So let's just say, for talk's sake, that we start off with $1,000 and we invest $1,000 at its lowest price. So we take our $1,000 and we divide that by the price of the lowest price during the 2008 recession. So that's how many shares of Microsoft we would have been able to buy during its lowest point of the 2008 recession when everyone else was selling their stocks. We would have been able to buy just over 58 stocks worth of Microsoft during that recession with our $1,000. So now all we do is we times this number by the price of the stock today, and we see where our initial investment of $1,000 would have brought us. So we times that by 181.81. And there you have it, folks. Massive returns. You're now looking at $10,657 with your initial $1,000 investment. So this goes to prove if you have the stomach and if you pick proper companies, blue chip stock companies that are going to last during a recession, then your returns are going to grow. As you can see here, 10 times the amount. That's crazy. There's one more thing I'd like to mention before this video ends in terms of investing during a recession, and that's that you need to be ready to invest. And I'm going to give you 2 tips in regards to this. Tip number 1, pay off your debts. Get your debts paid off. Debts accrue interest, and if you're paying off debts, that means you can't really use money to invest with. Debts are a priority. Can't stress that enough. If you've got debts, student loan debts, bank debts, whatever type of debt it is, focus on paying it off first so that when a recession happens, you'll not have to worry about putting your money towards your debts. You can worry about investing your money in the stock market. Tip number 2, start up on an emergency fund. And if you haven't heard what an emergency fund is, it's basically a fund that you can survive with for up to 3 to 6 months. So if anything disastrous goes wrong, for example, if you lose your job, which many people, including myself, have done during this recession, it means you're able to withstand that and you're able to use your emergency fund to get through them hard times. So you'll have money as well to invest. Having an emergency fund just gives you that peace of mind that you can invest in the stock market, knowing that if anything does go wrong, you've got your emergency fund in order to get by. So that's it for today's episode, folks. I hope everyone who watched it now understands why it's a good time to invest your money during a recession, and why the last thing that you should do is sell out, because once you sell out, then you've actually lost money. Pick good stocks, stick to your strategy plan, hold your stomach, hold your nerve, and watch your investments grow over time. Thanks everyone for watching, and if you made it to the end of the video, if you could do me a massive favour, please hit the subscribe button and smash the like button. I'm going to be documenting my journey to financial freedom, so please come along with me. Thanks very much, YouTube. Take it easy, everyone. Bye bye.